Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Jason Reynolds, and today is the 26th of June of 2023. I'm your host, ready to help you navigate the twists and turns of the market. Let's delve into the numbers, news, and trends shaping your financial world. First, let's take a step back to celebrate the exit of the S&P 500 from its longest bear market since 1948, marking a gain of more than 20% from its October 12th low. It took 164 trading days from the bear market low to exit, which was the longest period to exit a bear market since 1958. But we're not back to record highs just yet. We're still 10.5% off from the record close of 4,796.56 set in January 2022. Moving to projections, some caution is advised. Analysts are forecasting full-year profit growth for 2023 of just 1.2%. That's quite modest compared to the S&P 500's forward 12-month price-to-earnings ratio now at 19, up from 17 at the end of 2022. So the market might not be cheap, but it's not necessarily signaling a drastic downturn either. Now, let's bring the Federal Reserve into the picture. There's a real sense of anticipation around the prospect of a pause in rate hikes. Remember, the central bank has been on a rate hiking spree with 10 consecutive hikes since March 2022. But with inflation still stubbornly high and recent banking crises leading to tightened credit markets, the Fed's path remains a major influence on where stocks head from here. The big question on investors' minds is, will the Fed pause or keep hiking in June? But amidst these questions and concerns, a silver lining persists: the resilience of the U.S. labor market. The economy added a higher-than-expected 253,000 jobs in April, while wages rose by a robust 4.4% year-over-year. This is good news for Main Street, and generally a positive sign for the overall economy too. However, let's not forget the elephant in the room: the possibility of a U.S. recession later in 2023. Though this prospect might seem gloomy, it's not all doom and gloom. There's some historical context that should offer hope. When the S&P 500 has been up at least 8% on the 100th trading day of a calendar year, which it was as of May 25th, the index has averaged a 10% additional gain for the remainder of the year. To wrap things up, while the economic outlook for 2023 remains uncertain, there are reasons for optimism, but also a good case for cautious investing. Consider your personal risk tolerance and financial goals, and as always, stay informed and consult with a financial advisor for personalized advice. That's all for today, folks. Tune in tomorrow for another update on the fascinating world of finance. As always, do your research, stay informed, and approach any investment decision with care. Thank you for joining us. Stay on top of the waves of change, and until we meet again, nurture your financial future with care.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.